Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Friday. It's May 25th, 2012, and as we do every Friday, we're going to go over all the different charts that we track at PerfectStockAlert.com and going around the globe. So as you guys know, everything that I know moving into the week ahead. And right now, we're going to start off looking at the Australia markets. As always, these charts are kept on our website. All the annotations are updated every single day, so you can check them out whenever you like. Right now, we're looking at Australia's market. You can see we are moving lower here. Our close here is actually lower than we had seen before here. Again, indicating that the downtrend is not over. We're still pressing lower here, and I can see this continuing to move lower. There's really nothing here that I can take advantage of. We did have this counter trend move here, which we expected to happen because we were below the 30 line on the ultimate oscillator there. That's where you start to expect to see a little bounce. And in this case, we're just talking about counter trend bounces. These are not opportunities to be buying because the overall trend is clearly down. Lower series of highs, lower series of lows. There's no argument there. And right now, I would expect this to keep going lower. If you are shorting this at this particular point in time, I'd use this high right now, right here, as my stop point, and then just advance that stop. Lower she goes, keep advancing your stop. But I'm not going to take advantage of that opportunity. As you will see on another chart that I will show you in a little while, the reason I'm not going to take advantage of this here is because we're now at 28.63. That means we're below the 30 line, and that's typically where you get that bounce. Again, it doesn't have to happen. There are rare cases where you will actually go under 30 on the ultimate oscillator or the slow stotch or whatever it is you're using, get in oversold conditions, and just stay there because your market's in such bad shape it's just falling off a cliff. This may be one of those cases, but again, I want to slowly move back onto the short strategy here, taking short positions again, and I'm not going to use this particular chart. I've used others. Looking now at the Dow Jones Industrial Average, this one we were short a couple of days ago. We saw this opportunity here as a shooting star formation, the actual peak of this counter trend move here, which we expected because we were under the 30 line there. And then she's starting to roll over. You'll notice this day here went actually lower, didn't close lower, but it did intraday activity lower than we'd seen over here, telling us again that this is not a true bottom, which we talked about when it happened. And then now we're rolling over again. But you'll notice the main thing here, let me clean that chart up a little bit. But the main thing here is after you saw that little shooting star formation right here, you had a couple of days and you still couldn't take out this high. So I believe it's a safe opportunity to get short here. And with today's activity giving us a bearish engulfing signal, actually moving to the downside again, I see that as a pretty safe trade right there. Limited risk right now. We're looking at shorting in this range between these 2 points here and looking to the downside as being much greater. Honestly, I see a very devastating reality for the markets fundamentally. We're basically looking at a scenario much like the Great Depression, where you had the initial sell-off about 50%, and then back in 29, and then you rallied for a while, coming close to the top again. Before you had back during that time period, it was Germany that defaulted on their basic debts, and then we had the European financial crisis back then, which actually sent the all global markets into a tailspin again. Basically, the same scenario was happening. It's different characters, but it's basically the same concept. So I see the downside potential is very large in this environment. So I don't want to be, taking any long positions. However, if you are going short, you want to trade it smart. Don't just get short and hold and whatever. Just get short, keep a tight stop. As she moves lower, advance the stop. Eventually, be a counter trend bounce. Take advantage where you can. Trade it smart, but look at the downside as being much greater than what you're, seeing on the news. This is not over. Alright, another thing I want to draw your attention to here on this particular chart, we're going to see it on a lot of other charts, is this divergence that I've pointed out on this particular chart. We have a bear setup here. You'll notice it's your high point. Actually, usually closes. The close here is the highest close on that point there, and then you have a close here. So you're trending down. Yet the corresponding time period on the ultimate oscillator indicates something different. They're showing an uptrend here. And this is telling you that this counter trend move that we're seeing right here is unsustainable. It's going to break down to the downside, and we are going to take out this low. We're going to close below that point. So all of this means look for an opportunity to get short. I'm already short here, but if you're not, look for one. The French CAC 40 index, not a lot I can do with this particular chart. At the moment, we've had this major sell-off here. We eventually got stopped out right here, and now we're just kind of moving sideways right here. I don't see an opportunity to do anything with this particular chart. We could see a little more move to the upside. We could just break down from this support here. Right now, I just can't use it. We're just going to watch this thing for now and just see what happens. If this market does, in fact, break to the upside, that's fine, but I'd still be looking at the previous high point here. If you can't break above that, the downtrend remains unquestioned. So that's the important aspect here, is whenever you're seeing these counter trend bounces, don't pay any mind to them. Like here's your high point here. Don't pay any mind to a counter trend bounce unless they can take out the previous high. It doesn't do that. Then all you want to do is look for that bounce, is find that sell signal, shooting star formation, something like that, or bearish engulfing or something like that, and then get short again. That's what we did back here. Because we were not able to take out this high, therefore we knew that sell pressure was increasing, buy pressure was decreasing, and down we go again. So we're looking at the same thing right here, but right now I can't get involved, but I am watching it. Looking now at Milan market, the FTSE MIB, you can see that we have the same overall story as the French markets, just basically moving sideways right here, and nothing I can really do with this chart at the moment. Try to take a short position off of this one here. It was a little bit risky because we were already, we'd already had a lot of downside potential there, and we knew a bounce was eventually coming, so we eventually got stopped out, which is no big deal. We just basically got stopped out with our entry point. So she's moved around sideways here. We've not lost anything because she's just moving at the point that we got broke out, or we got stopped out, I should say. So there's, again, nothing here that I'm interested in on the short side just yet, and I definitely wouldn't take it from the long position because we're in an overall downtrend, clearly defined. The main thing, again, which is like I showed you with the other chart, if this move to the upside is unable to break out of this high point here, there is no possible reversal to a bullish trend. You are still very strong in a bear trend. Same thing happened back here. High point, we had a counter trend bounce. We were under the 30 line. We expect to see a bounce. You get this bounce, you do not take out the previous high, and therefore we simply fall down again. German DAX composite, same overall story, moving sideways. I'm not taking advantage of this one just yet, but I will be keeping an eye on it. In this particular case, I do want to draw one more thing to your attention here. Whenever you see these situations that we talked about, lower series of highs, lower series of lows, you're in a downtrend, and then eventually you get a counter trend bounce, and again, we want to talk about the previous high. If you don't take it out, then you expect to go lower. Then here, you take out this high. Let me show you what happens here. You take out the high, which puts the reversal question on the table. This could be a reversal from a downtrend to an uptrend. How do you know if it is? You will know when the next pullback comes. If the next pullback comes and gives you a hammer formation or some signal that you should be a buyer and gives you a series of higher lows and higher highs, because you've had the highs here and here, higher highs, and then you look at the pullback, does it give you a series of higher lows? In this case, it doesn't. Then it goes right back to reverting and says, no, she was able to break out a little bit higher, but she couldn't sustain it, and down she went lower. Then you get the same scenario again. Just because you get a higher high doesn't mean that all of a sudden the thing is reversed. It still has to do back test, basically pull back and see, do you get a series of higher lows? You finally get a hammer candlestick, which is what you're looking for, but you'll notice the low point here, lower low here. You don't fall for that. That's going to just tell you this downtrend is still in effect. So she just keeps falling apart. Right now, we're just moving sideways. Wait for a good, clear opportunity to get short and leave it alone until then. Looking here at the gold chart, you can see that they are attempting, or it would look like they are attempting to reverse this downtrend into an uptrend. And you can see that from a couple of things. First off, you can see that you had this major sell-off right here. You broke this previous little resistance line that you had there and support line right here. So you broke through here on this day. You started selling off. Then you bounce off of this hammer candlestick formation. Then you get a sell signal right here. And you find that this sell signal is right there where you expect it to be. Middle Bollinger Band line. Previous support line broken down becomes resistance area. That makes sense. But then we pull down here, get a higher series of low points, and we're now turning around like we're going to pretend to make a move higher and take out this high point, which would give you a higher series of high points as well. So someone could argue that is bullish and I want to be a buyer here. However, I will remind you, resistance, resistance, resistance. Any move up here is going to be short-lived, so I would not be a buyer of this situation. I'd stay short with the stop right here. The Hong Kong Hang Seng Index, we're actually short this one for the past couple of days using this high point as our stop. We haven't advanced the stop just yet because we see that we could be bouncing around sideways here before we actually break lower. However, I want to point out, even though you've had this move here and then a pullback here that gives you a hammer candlestick formation, this low point is lower than this low point. Therefore, you have not actually seen a true bottom. Leave it alone. If you're trying to go long, you're probably making a mistake here. There's nothing more that can happen in this particular chart than a counter trend bounce, which means you look for those opportunities where you get this counter trend move, and then you find some sell signal like that, and you get short. We missed that one, but we'll be looking for another one if we get stopped out, because the upside potential is again limited. The BSE, or the India Bombay Stock Exchange, same overall story with the sideways moving after a major break to the downside. We're just moving sideways right here. I am short this position right here because we've seen a shooting star formation here and a bearish engulfing signal here. So I believe any move within this range is just a shorting opportunity. If we get stopped out, fine, but at this point we haven't been, and I would be looking for this to be a short opportunity again because the overall trend is clearly down. And any move to the upside was why I wouldn't buy it, because this previous support line here is now going to be acting as resistance. Upside is limited. Looking now at the Japan iShares of the EWJ, you can see we're already short this one, have been for about a week now. Moving to the downside, still we use this high point here. I could advance the stop down to this point, but I want to wait for a close below this point here. When we're back on the Bollinger Band line like we were back here, then I will advance my stop. Until then, I'm just going to leave it sitting where it's at, because we could see some bouncing along sideways like we've been seeing with other charts, and that would get us stopped out if my stop loss limit was too tight. So I'm going to avoid that, but leaving my stop where it's at. The London Financial Times Index, or the FTSE, you can see in this particular situation we are already short, but we're actually just moving sideways. The same overall story that we've been talking about with the other charts. We've got this one moving sideways as well. There's no real move to the upside here. You've got no hammer candlestick formation on the bottom. This tells you we're actually going to end up going lower. You've got a major bearish engulfing signal here. But again, this is all going to be news driven. As the news develops on Spain and Greece, that's what's going to drive these markets lower. So we can bounce around in between there before that news hits. So be looking for your peaks. So if you're not already short, be looking for some nice sell signals and opportunities to get short, because this is not a buyer's market. Looking now at the NASDAQ, this one I could go short, but I'm not going to. Like I said before, I want to slowly move into the shorts position because I don't want to have them all taken, and then if we get a bounce to the upside on some economic news we may get next week, if it's bullish looking, then we can get a jump to the upside there and get me stopped out of several charts. So I'd rather not do that. Take a couple positions on the short side. If we start moving lower, then I'll look for more to add to that. But right now, I'm just going to let this one slide without me, assuming we keep going lower. The main thing here, and you'll see this on a lot of charts, is this bearish setup, and it's a divergence formation here. You can see this downtrend, you can see this uptrend here. This is not sustainable. Even if you were to make a counter trend move here on some good economic news next week or something like that, you would still have yourself in a scenario where you're going to be setting up, because also this would be moving higher as well. You'd also have yourself in a scenario where you're not going to be looking at a sustainable move to the upside. Multiple reasons, of course. You've got this no hammer candlestick formation here, means there's no support. Here's a support line. Here's a support line. No support here, no support here. There's things that you need to take note of. Here again, support line. Eventually supports can break down. When that news out of Europe, so forth and so on, keeps tearing at the market, you get two choices. Either the support holds or the support breaks down. In this case, we're seeing supports fall apart. Now that the supports have broken, they will be acting as resistance. Being a buyer here looking for a big move to the upside up here is insane. You have resistance lines at this previous support line here and here, as well as here, as well as here. Alright, there's a lot of resistance there, as well as this 200-day moving average, blah, blah, blah. The main thing here is don't be a buyer. The XOI oil index, we talked about this last night. I'm actually willing to go short as of today's activity. We saw this shooting star formation here. First off, we were short back here. Started to sell off. We expected to bounce eventually because we were below the 30 line here on the ultimate oscillator. You eventually tighten up the stop loss limit. We get stopped out. But then she makes up, after one day to the upside, she tries intraday to make a little bit higher, and she sells off, giving us a shooting star formation right here. I didn't jump on that first one as a sell opportunity. I could have, but I didn't. I just let it pass. Just want to see what we get, some confirmation the next day. But the next day we saw a little bit of buying activity, and then with that situation, you know that you're kind of moving sideways right now. We didn't make a lower low, so it's something I want to short, just didn't want to jump on it just yet. But now today we're seeing a little more sell pressure here, and we haven't actually broken out above this high point here, so I put a stop there and be short in that any situation I can within this range right here. And clean that chart up a bit. You also notice the big bad divergence formation, the bear setup here and here. We talked about it again yesterday. I won't go on into it, but you can watch that video that I made yesterday if you'd like more on the oil index. The UUP, or the US Dollar Bullish Index Fund, this one you can see we've clearly defined the direction we're going. It's an obvious breakout to the upside, and this has got a lot going for it. There's a lot of information here. As this continues to move higher, you're going to see different things. As the price of the dollar increases, you will see gold decrease. Therefore, it's another reason not to be a buyer of gold. You also will see that as people sell stock, you see a breakdown in the markets, you'll see the price of the dollar rise, because when people sell stocks, they inevitably in the U.S. Get U.S. dollars, and that puts a floor in the price of the dollar, right? You have a couple of formations here. It's not actually all seeable anymore on this chart. We were watching a potential inverse head and shoulders formation a while back. We saw this pullback here as the actual formation of the second shoulder, and we're expected it to move higher. It started to do that, but then we started to alter the formation here, and we pulled back down here, coming up with, you could actually change it. It could still be an inverse head and shoulders pattern if you expect it to be that way. That's fine. It didn't actually take out the low point of the head. Therefore, that overall view still stands. However, it's also could be argued as being a double bottom, because you have a 2174 low here and a 2176 low here. That's basically a double bottom. So, in effect, you've got two different signals, both of which are telling you a bottom in the dollar and reversal to the upside, and major reversals. However, in this particular case, and you can do this different ways, you could look at this being the high point here and the resistance line here. That's why when you broke out above it, you got a little pullback, which is no big deal. It's just a pullback to find support, and then we jump off of that and we'd rally higher. There's different ways you could draw it, of course, but again, I would not be betting against this. And I know some people will, because it looks like it has a divergence or a bearish divergence, which would actually expect, which would tell you to look for the dollar to fall and stocks to rise. That's not accurate, and the reason is because it's a breakout. In a big breakout scenario, especially when you've got a lot of momentum to the upside, you can get the illusion of a divergence forming, a bearish divergence, but it will actually shake it off. What will happen is up here you can see that you've got this high point and a lower high here showing a downtrend here, yet you've got this close here and a higher close here showing an uptrend. So that would look like a bearish divergence, but it's not, because you've got this major support right here. Any pullback here would simply be a buying opportunity, and everybody knows that. Ultimately, that means if you invert it in your head, any kind of a rally you'd see in the markets would be a sell opportunity. The Russell 2000 Small Cap Index, another divergence formation we've talked about in the past. And you've got a high point here, a higher high here, trending up. And you've got the close here, the high close there, and then the next close is here, so you can see we're trending down. Obviously showing a bearish setup, clearly defined. In this particular situation, I have not taken a short position, though an individual could do so. I may add to it later. Like I said, I'm trying to leg into my short position a little bit here, a little bit there. If we get a bump to the upside next week and then fail shortly, then I would take a position at that point. But that's what I'm trying to avoid, is I don't want to get too short and then see a little couple days to the upside and then we roll over. I don't want to get knocked out of a bunch of shorts and then have to dive back into a whole bunch of shorts. So I'm trying to slowly move my way back onto the short side. This previous support here, here has broken down. That means that support is now acting as resistance. Don't be a buyer. You don't have a lot of upside. Be looking for a short opportunity. If you are short, this is what you're doing. Let me clean that up a little bit. What you're looking at is this little counter trend move here, shooting star formation here. Your stop is right there. You are shorting within that range right there. Looking for it to go lower because you don't have a hammer candlestick formation here. It all makes sense. The SPX, or the S&P 500 Large Cap Index, I would actually start going short on Tuesday. Remember, this is a 3-day weekend, so you won't have an opportunity to go short on Monday. I would definitely short this, and I'll tell you why. You've had a series of up days. You've had actually 4 consecutive days to the upside, but you only had basically 2. Remember that we talked about this major sell-off here. You were falling below that 30 line. We expected to see a bounce eventually. We tightened up the stop. We got stopped out. But a second day, we moved to the upside and sold off again. Gave us a shooting star formation. Let me clean that up so you can see that. Basically, shooting star formation right here. Then we sold off and got bought back up, and she kept fighting. So we just left it alone for a while. We wanted to see more confirmation to the downside, and we were finally seeing that today. The main thing here is that you have had 3 days after this shooting star formation right here to break out above this high, but they never did. That shows that there's major sell pressure there, and there's not a lot of desire to be a buyer. I wouldn't be too surprised, because you've got a previous support right here and here that broke down. Therefore, that support is now acting as resistance. Being a buyer at this point, looking for a rally to this point, is just kind of silly. You got a lot more downside potential. So I'd be looking for a short opportunity, which I would say take now. Silver looks a lot like the gold chart, trying to show a reversal situation. Someone could trade from the long side, and I just wouldn't do it. Like I said, With the dollar showing a breakout and a rally to the upside, that means gold's going to go lower. I wouldn't be a buyer here. However, someone could argue, and has argued, that you could actually see a rally in gold and silver, especially if you start seeing governments bailing out banks and things of that nature. They start printing money in one way or another, and you could see gold and silver rally to the upside. If that's your perspective and you want to be a buyer there, I understand that, and you could do so. But again, I'll remind you, the overall trend is down. You're trying to call a bottom, and that's like trying to catch a falling knife, and I suck at that, so I'm not going to do it. The Toronto Stock Exchange Canada's market, same overall story, bearish conditions galore. You've got the major sell-off, lower series of highs, lower series of lows, nothing bullish here. No hammer candlestick formation here. We tried to get short again here. Got a little bit greedy because we talked about this before when it happened. We were below the 30 line when that was going on. We saw this little sell-off here showing that this support breaks, but we couldn't sustain that and we got stopped out as she moved higher. Again, you try to go short whenever you're under the 30 line. It makes it that much harder. When I was showing you Australian markets, this is why I'm not taking that Australian market opportunity, because I tried that over here and it just didn't pan out for me. It broke in the opposite direction. So now I wouldn't take a short position either. I don't really see a clearly defined shooting star formation at the top, and that's just something else that's not going to jump on. I may miss this chart when it moves to the downside. I may jump on it later. I don't know. Right now we've got plenty of gains on the table from this trade, and I'm not going to just lose it here and there, just taking short opportunities every time I get some signal out there. So I want a clearer signal before I get short. I would expect to find resistance at this level here. You had support there before, here, and you broke through it. Then you got some shooting star signals. We took that as a short opportunity expected, and that was the high point. She sells off. Now she's bouncing around here, flirting with this level. We're not going anywhere to the upside. I would be looking for a short opportunity, but I'm not short there now. The VIX, the VIX, the volatility index, this runs the inverse of the S&P 500. I have marked this chart showing that an individual could take a buy opportunity here on the VIX, expecting the markets to fall apart, and then you would be seeing the VIX rally because they run the inverse of one another. I've drawn the low point at the previous hammer candlestick formation here as being 1 cent below. That would be my stop loss limit. I'd be a buyer here and within this range right here. This is something that you want to think about. I wouldn't personally, if I were looking to trade the VIX, I would not take the short opportunity on the S&P. Or if I was taking a short opportunity on the S&P, I would not be trying to buy the VIX, because basically you're doing the same trade. Don't do that, because if you do get a move to the upside in the markets next week, a couple days to the upside, you can see this guy come down here and stop you out at the same time. So you would then be stopped out on the S&P as well as the VIX. There's no sense in doing that. What I would do instead is pick one or the other that I wanted to trade. And if I got stopped out, I'd be looking for another entry opportunity on the long side of the VIX and another entry opportunity on the short side of the S&P 500, because as we know, you always work with the overall trend, and the overall trend, my friend, for the VIX is up, and that confirms the overall trend of the S&P as being down. So trade with the trend and you will make a far greater deal of money. Also, you'll notice on this particular chart, if I'm not getting too long-winded here, and I am, so right here we've got this little bullish divergence formation here telling you to look for these markets on the VIX to shoot to the upside, and that also confirms the bearish divergence formation that you have on the S&P 500. So everything agrees. You know everything that I know. God bless. Take care. Enjoy your long weekend if you're in the U.S., and I'll see you all on Tuesday. Also, be sure to refer your friends if you've not been to our free website at perfectstockalert.com. It's right there. It's 100% free. And all we ask in return, please refer a monkey. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.